Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, January 8th, 2019. This wrap will be shorter than the early morning update that I did today because really we're about where we were at the same point in time. As I zoom in here, this is today's price action. We can see here, let me show you on a 1 minute chart. That's where we were this morning. So we closed both the large cap indexes that I follow, QQQ and SPY, as you can see here, closed below today's highs. That was a high that popped this morning. They faded it, took it down just below the gap, recovered a lot of that, but not all of it. And then again, I just showed you that SPY and QQQ, same story. So I did the early morning update somewhere in here today, and that's about where we closed. So again, not a lot new to report, and therefore not much has changed in my outlook. This is a chart I shared this morning in the video and on the site on rightsideofthechart.com. This 160.36 level, give or take, on QQQ, and that's where we popped up and nearly hit today. And so I'm still looking for something like this, a move down there to that here. That was this morning's chart. Let me show you a live chart and I'll give you that level. 60-minute chart. Yeah, I must have covered it today. Then 155.82, give or take. You can see the PPOs rolling over slowly, but eventually rolling over at a pretty high level too. And we had recently a little, a blip here. Sometimes you have it looks like it's going to cross. You can get a little kickback and then it crosses. But usually when you get up at this high a level, you usually get a bearish PPO crossover. Now keep in mind, of course, we were in a downtrend, a clear downtrend back here. So these pullbacks were a lot larger. I do think we'll get the crossover, and I do think we'll pull back. Again, as I've said for the last 2 or 3 days, my convictions are not very strong, so therefore I'm not, it's not any double size or oversized position size on this. I'm just in my trading account. I'm short looking for a pullback, as I said, to those targets. And now at this point in time, if it comes tomorrow, we may still get a bounce here, or we could just come on down and hit both that uptrend line, which is my preferred target, and that 155.82 level around the same time. So that remains my expectation heading into tomorrow. So we'll see what happens. And let's just take a look at the futures real quick. Let's see right here. Here we go. This is NQ. We can zoom in here. Remember, NQ broke down earlier than SPY, kind of limped up, back tested a little. Still very much has those divergences intact that I mentioned before. They're not taken out yet. They're sort of flattening out. I'm not so crazy about that. I prefer when you see peaks like this. You see a peak here, and then a nice pullback in the indicator and come back up, make a lower high like that versus this flatlining stuff. Either way, it is divergence. And again, it kind of plays in also to my thoughts that the pullback will be relatively shallow. Here's that uptrend line on NQ right there. There's the key support level. So if you're futures traders, again, nothing's changed. 64.10 roughly, give or take 64.10.50, and then the uptrend line and possibly that 62.72 level below that. So that's NQ. Let's look at ES real quick, and we'll think we can wrap it up. ES, similar story. We broke down, and as I was doing the video, we had broken down and put in a pretty big red impulsive candle. I thought that would be the catalyst to take us lower, but what happened is we came in, we had minor support right here. You can see right there, there's a reaction high where I'm starting the draw, some reaction lows. So we came in there. The red candle played out, and all we did is back tested there. I wouldn't call this a bear flag. It takes a form of a bear flag pattern, but we don't have a long flagpole leading up to it. Either way, what I can say that it is a break of this minor uptrend line or minor small bearish rising wedge right there. That's it on the 60-minute chart, and there's your divergence. And so you have a breakdown and pretty much a back test throughout the day. Still failed to take us above the highs that we had earlier. So there are the targets right here for ES, 25, 22.50, give or take. That was that key level right there. We broke out, back tested, and then rallied. And that comes in, it may come in tomorrow right around this target here, that uptrend line as well. So I think that's it. And let's just take a quick look at the daily charts, might as well. Here's a level right here, about 257.23. is a support resistance level. We had some reactions there from the April lows reaction. There's a candle bottom right there before the low in February, a little spike down below early February and a close there, and some reactions around there. So it's not a super solid level. Again, it's not well defined, those lows back from earlier in the year, but we're in that zone right now. And I guess it really runs up to about right here. You can also see if we zoom in here, look at that doji candlestick right there. So let's see what happens tomorrow. Even if we get a red candle, looking at the daily chart, could we pull back? If we pull back more than what were those targets again on the 60-minute? 251.20. So if we happen to get a pullback with some teeth, no, I'm going to raise this line right now because I see reactions right there, and that comes in around the same level, give or take. So yeah, let's just say that's it. That would be, I think, a objective area to go long if we do get that type of pullback down to the 251.20 area. There's some reactions there as well. And let's look at QQQ. QQQ, another also nice little doji candlestick right there. So the potential, that could be a potential topping stick. Here's a hammer type candle there. And that also, I have resistance here. That's the same level I showed you a minute ago on the 60-minute chart, give or take around 160.30 or so. And that you can see there is quite a bit of, and that's the thing with this market, there is a lot of overhead resistance to overcome. So as oversold as we were, as much as I think the pendulum swung too far to the other side, as much as I'm still looking for some more upside from here, we're starting to get to that. I can tell you this right now. We're now at the lower end, I believe, where I went a couple weeks ago, the lower end of my bounce target zone. And that can continue up. I'm trying to be flexible right now, read the charts, but I'll tell you the thing about this. If you believe we're in a bear market, as I do, that the bear market started back here, and then what you can expect out of this is it'll take until the point where the masses believe that this was just a correction, a great buying opportunity, all is hunky-dory, and you'll see. And I've all throughout this, from the top here down to the bottom, I told you how the news would flow. I told you what would happen. I told you the Fed would start backing off, becoming more dovish. All those things that happened. And so what you're seeing now is everything I said. They're coming out and saying, oh, well, the economy is still strong. And that is the case. I maintain that. I said that a few weeks ago back here. But you'll get to the point here where they'll be talking about new highs in the market and all that. And that's the premise I'm working off of now. And the thing about it is, like I always say, the markets are dynamic, and so is my analysis. So if something changes, and I continue to see evidence that we might rise beyond this point here, there's a potential downtrend line. There's targets there on QQQ. Really, SPY. Let me show you SPY real quick here. SPY. There's a big triple top right here. These three roughly equal highs on SPY. And that would be a level that if we get up there, and it's quite a ways up, right now, I think it's possible, and I can tell you this, that would be the uppermost bounce target I'd have at this point in time. If we get there and things change, and that may be the case, but at this point in time, that would be the uppermost bounce target, and we're really at the lowermost bounce target, because I'll tell you, things can turn on a dime, and if you haven't seen that over the past few months, you'll know what I'm talking about. I'm talking about sentiment in the market, where people think things are going. You can see a green market that looks like it's never going to stop going up, all of a sudden turn around and dump and go back to this mode. So let me just show you one scenario here. I pointed out a while ago, and one reason I became bullish, we had these big divergences, strong positive divergence on the RSI. We had some on the PPO that got burned out, but to put a lasting tradable bottom where we can get maybe a multi-month rally instead of a multi-week rally, I'd love to see a scenario that looks like this. A plunge down, undercut the new lows, come in, put a lower low, and I'm drawing divergence lines. So you'd have your PPO do this, something like that, and the RSI divergence could simply be extended, and then we'd have nice bullish divergence on both the PPO and the RSI there, and it would work the same on QQQ. Show you that. Here we go, QQQ. Draw something like that. Keep these divergences going. Come down here, after a sharp move down. It'd have to be pretty sharp and swift. I'll tell you what, I don't know at this point. And I'm thinking this. I'm thinking out loud right now, guys, as I do the video. We'll probably have to bring that PPO up a little more in order to come down and put in a lower, a higher low to give us positive divergence if prices were to make a equal or lower low, if that makes sense. Because you don't have positive divergence until prices make a lower low and the indicators make a higher low. So let's not think too far ahead. Right now, I'm only really focused on the 60-minute charts. I remain, long on my long-term accounts, IRAs, 401ks, those type of things. Just looking for a little pullback to game right here on the QQQs. And again, nothing I'm going to bet the farm on at this point in time. And I mentioned on the site today, nothing I'd add to until weakness. I want to see today's gaps. They were taken out slightly. I want to see us move below today's lows, and then I may add a little to that position, but otherwise just keeping it relatively light. And so there's a pullback. That's my preferred scenario in QQQ. But again, if we get another thrust up, bring this PPO up a little bit, and then maybe reverse then, go have another leg down, because what I've maintained all along, and I really feel strong on this, I think people are jumping all over similarities to 2008, 2007 top, the 2009 lows, that last bear market, and I pointed some out too at the top that did play out. I talked about some of the, the move back above the 200-day EMA, things like that, how we did that back then in '07, and then we went on to break that back down below it. Some other similarities I pointed out, but I just strongly believe that these no two bull or bear markets are exactly the same, and they're not even very close. There are similarities. You can look at wave counts and other things, divergent highs and lows and kickbacks to resistance, and the markets bouncing off the key moving averages like the 200-day, 50-day, those type of things. But as far as if you overlaid them, they're not going to look the same. And as I said before, 2008, the banking system would have collapsed if the government didn't step in. So we had that meltdown in the financials. And I maintain, I still believe that the next bear market, if we're in one now, which we probably are, will be a multi-year bear market. The last one was over before we knew it. I think it was, 15, 16 months, something like that. It was as painful as it was quick, relatively quick. And I think we'll be looking at something closer to the lost decade like Japan had. It may not be a decade-long bear market, but and that wasn't really a bear. It was just sideways market for them. Actually, 2 decades. They call it the 2 lost decades in Japan back in the 90s. But that's sort of what I'm looking at here, and therefore we could have at some point another thrust down, put in a divergent low, and then come way back up and have a nice rally. We're in 2008 after the first kickback rally, then things started to melt down. I'm talking about the high in 2007, then the initial thrust down, the kickback, and then that's where things fell off a cliff. Here, I promised you a short video, and I'll wrap up with this. So here's the last three bull and bear markets. Here's the 2007, the tech bubble. This was the longest bull market in history. This one, if it is over, I think, if I'm not mistaken, would have fallen just shy. But we hadn't seen anything like these two as far as duration. Now, some will argue, some call this part of bear market here. We came close, some indexes. And then many sectors, as well as the small caps, they fell down more than 20%. So some might consider this a bull market number one, sideways deer market or bear market, and then another bull market here. We'll see. Whereas this, you can see, was a pretty straight shot. Now you can see how this bear market looked from the dot-com bubble right here. You had your initial wave down, kickback rally, and this is again what I'm trading right now. And these kickback rallies, have I shown you before, are pretty impressive. And as of all these bear market rallies here, I'll just grab this one right here. I'll just randomly grab one. Grab the low to the high. The pop-up box to the left tells me there's a 54% return right there in QQQ. That first bear market rally, grab the candle, it'll snap to the bottom of the candle, and the pop-up box to the left, 43%. Now this was more of a parabolic move. We look back now, this was a 2007 top right there in October, and that first bear market rally was from low to high about 20 to 23%. So this is why I've been bullish and long, and I started scaling in a week or so early, no problem. I'm well above, water well profitable on those trades now, and at some point I'll be looking to get out. But what I was trying to get at here, and the reason I want to look at this, I don't expect this. Anything is possible. I'll try to stay open to all possibilities. I know we had a meltdown here as well. I just think a lot of things are different. I could sit here and talk for an hour on some of the reasons why I think that the next bear market, if we're in one now or whenever it comes, will look more like this, and with trading ops along the way, a more gradual, not a meltdown scenario like we had here and here. So we'll end it there. And again, that's just macro stuff, and that can all change, but that's what I'm looking at now. So back to where I started the video. This is a world I'm living in right now. My active trading account, if you're not an active trader, and you're on the same page with me that there's more upside left in this bear market rally. So far, we've only gone, I just showed you the first initial bear market rallies in those other two markets did. This one's only gone up, what, was not even 12% or so in QQQ. So there's still plenty of upside if this thing wants to run, and I can certainly see that. And I can tell you right now, although I'm not right now looking for a move this high, it wouldn't surprise me one bit to see the Qs kick all the way back up somewhere around right here. And that would be from low to high. That would be a 22% move. So we'll see. So right now, that's what I'm looking at. Maybe a little weakness. I just don't think it's good to chase right here at this point in time. And if you want to add more long exposure, you may get an opportunity here soon. And maybe not. Maybe it keeps running up, but that's my near-term outlook now, as well as my intermediate and longer-term outlook. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.